Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss how the dreaded T word is now once again impacting the market and why there is a particular region which is in a real panic about it. As well as that, I want to discuss the all-important US CPI due this week, and of course, how the market is now looks to be looking for alternative investment ideas. But before I get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, with the risks at hand before entering any trade. With that out of the way, let's get started because we've got quite a fair bit to go through today. So, first of all, of course, the dreaded T word is never gone away. It's been around for ages. We've been talking about it, since the beginning of 2025, or maybe even before that, maybe even since November last year. But whereas the market has been ignoring it for a good long while, looking at the so-called taco trade, it's now beginning to scare or spook the market slightly because Trump is back on the tariff attack once again. And big region which is scrambling to try and not face these tariffs is the EU, because the EU is currently scrambling to try and avoid Trump's 30% tariffs, because on Saturday, Trump announced 30% tariffs on goods from the European Union and Mexico to start on the 1st of August. Don't forget, on Friday, he did 30% on Canada as well. But it's the EU in particular, which is in a bit of a panic on this, because they are in a bit of a panic. And I'll tell you reason why the EU is panicking on this. Well, first of all, the US and the EU have the largest bilateral and investment relationship in the world. In fact, their global trade represents almost 30% of global trade in goods and services. And this is a big deal, especially for the EU. Okay, especially for the EU, because in 2024 alone, the EU and the US trade amounted to 1.68 trillion euros. That's almost as much as 4.6 billion in trade a day. Now, the reason why the US has a problem, or Trump in particular has the problem with the EU on this, and why this is being brought up again, is, like I say, that's a lot of money. So you're thinking, why rock the boat? Why unsteady this relationship? The reason why, the US has such an issue with this is because there is a massive trade surplus between the two, as you can see here. Now, as you can see, let's make it bigger so you can see it a bit better, actually. As you can see, the EU exports to the US is massive compared to the imports coming in from the US to the EU. And there's a massive balance between this. Is what's upsetting the US. Now, you can sort of understand this a little bit because obviously the EU sells a lot more stuff like wine and things like this, but this is the big part of their industry which they sell to the United States. Okay, it's pharmaceuticals, medicine, vehicles, BMWs, Audis, Porsches, things of this nature, Volkswagens, machines, aircraft, motors. So it's a huge chunk of the EU business. But the thing is, the Europeans or the EU is just not buying enough of US goods. Now, the reason for that, of course, first of all, is the aquaculture side of things. They have different standards in the US for aquaculture as they do in the European Union. The European Union are a lot stricter on certain conditions for aquaculture. Then you have cars. Obviously, the EU sells BMWs, Audis, Volkswagens, Mercedes, etc., to the US. But the European Union does not buy a lot of US cars, like Chevrolet, Mustang. The only sort of car maker which is bought in the European Union and was till the beginning of this year was obviously Tesla. But here's the thing, is the big stumbling block. Okay, again, it's about regulation. In the European Union, there is certain conditions for cars in the European Union, as in safety core, as in size of the car, because the roads in the European Union are a lot smaller than they are in the US. So there has that issue. So again, this is causing a really, really big issue. Okay, and of course, the question is going to have to be asked, obviously, is who's going to suffer the most? What country is going to suffer the most in the European Union? And the country who's going to suffer the most is the bigwig in the European Union, is the big boy. And that is obviously Germany, because Germany's going to suffer a lot. Because if you look at their, Pfizer, for example, I can't say that correctly, but again, pharmaceuticals, okay. And we already mentioned BMW, Mercedes, Volkswagen. But there's a huge part of it. But Ireland's obviously next as well. They're going to suffer. France is fourth down the line, is going to suffer. So there is a lot of big concern about this. This is why the European Union is in a bit of a panic. And they are trying to negotiate a deal with the United States, trying to avoid these 30% tariffs. Don't forget, as well as that, we've already got tariffs on steel and aluminium already. Okay, so that's already in play. So, this is why, again, the market, though, has been ignoring this for a while, looking at playing the taco trade because of the European Union and the size of this trade deal that they do. This is extremely making the market very nervous. Okay, and I think maybe it's a little bit that, yes, we've been trading the taco trade for quite a while, but the reality is this tariff threat, this trade war is real. And we haven't seen the impact of it, this trade war yet, which brings me on to another point, which I want to make at the moment. Because again, don't forget, it's not just the European Union, of course, and Mexico. 22 other countries receive letters threatening tariffs ranging from 20% to 36%. Okay, major trading partners, Japan, South Korea, just to name two. Okay, and all these tariffs are going to start on the 1st of August. So, got those 22 countries, you've got European Union, you've got Mexico, you've got Canada, all to try and arrange a deal before the 1st of August, which is only just over 2 weeks away. Don't forget, last time we had a delay on Liberation Day, we had 90 days. We saw two trade deals, technically. One with the UK, which I've said time and time again on this program, was the easiest trade deal to do, and a deal on Vietnam, which is interesting because the Vietnamese have come back and said, well, we didn't quite agree to that, by the way. But anyway, that's a different story. So we couldn't do it in 90 days. And we've got now just over 2 weeks to do 22 countries plus the European Union, plus Mexico, plus Canada before the 1st of August. You can see now why the market is getting a tad little bit nervous. But of course, again, the market would then say, oh yeah, well, Trump would then delay it again, like he has done several times. But he's adamant this time he is not going to back down. No, somebody should have told him what the taco trade means. We should have kept that quiet. But anyway, apparently that's what Trump says. Anyway, because of this, I'm saying all the major indices, though they still remain near record highs, their sort of optimistic winning streak has really sort of come to an end. Last week was the first time they ended that winning streak and closed at a loss. And of course, we'll look at how they're reacting in a moment. In the moment, we'll bring the market up. Anyway, which means, okay, because there is this little bit of nerves and, jittery feelings about the market at the moment, means the market is now looking for alternatives. So automatically you think safe haven, you think gold. Yeah, normally I would say that. This case, because I'm a gold bug. Those people who watched this program before, they know I talk about gold all the time. It's indeed my first love when it comes to trading. But there's another metal which tends to be very attractive at the moment, and it's proven to be an alternative to gold, and that is silver. The silver is trading at the highest level in 14 years. And that makes sense because gold is at record highs, okay? It's expensive and it's very jittery when it's at record highs. So, of course, they're looking for alternative. And that, of course, is gold's little brother, silver, as an alternative. There is something else as well, which is proving to be an alternative as well. And that is, of course, Bitcoin. Bitcoin hit a new all-time high, surged past $120,000 for the first time. So there's another alternative the market is looking at. And here's the other thing. It also does appear currently, as we stand, that the anti-dollar bubble may be about to burst. Because don't forget, 2025 has been one of the worst years for the US dollar in decades. The dollar's been under humongous pressure. But over the last couple of trading sessions, we are beginning to see the dollar fight back. So it's like the anti-bubble. It's like the market's been like, desperate to sell the dollar, but now they've sold it too much. And eventually it's coming back. And it does look like the dollar is also looking to be an alternative as well, which the market is looking at. But anyway, let's have a quick look at the market and see how things are looking at the moment. We'll start off with, obviously, as we always do, with the indices, the S&P 500. Like I say, it's still around those all-time highs. Okay, so it's not like a complete rush out of the market, but it is negative, and it's been negative for the last week now, because there is beginning to be a bit of a slight concern. The same with the NASDAQ as well. Okay, as you can see, the NASDAQ, all right, a little bit up today, but again, only just, but it's been slightly, the attraction of the NASDAQ is down. And same with the Dow Jones as well, slightly up today. But in general, if you look at on the daily, again, slightly not enjoying the excitement and the euphoria it was experiencing a little while ago. And again, if we look at some of the Mag 7 as well, in general, how the market is currently at. Tesla has had a horrendous 2025. Slightly up for the day, but what a bad year the Tesla's had so far. Meta, okay, holding its own. Microsoft, slightly down, but Microsoft, in my opinion, is the one to watch. And I will do a special on Microsoft. I really do, because I have my reasons. I'm keeping a very close eye on Microsoft. Amazon, slightly up, but not by much. Alphabet, the same. Nvidia, became the first $4 trillion company last week. Slightly down, but nothing like that. If we go back to currencies, I want to look at the currencies again. Like I say, this is the thing I want to talk about with the dollar. The anti-dollar bubble looks like it could be bursting. Don't forget, with the euro trading at levels not seen, since November 2020, it's now back down below 118, where it was really enjoying itself. Currently trading at 116.86. Same with the British pound. My Lord, it was just, beginning of the month, trading around 137, below 138. Now back down to 134. Again, like I'm saying, we're looking at that dollar strength. Look at Bitcoin. Like I say, currently trading around 121,690. can hit a new all-time high, again, for the alternative. And look at silver, like I say, trading at $38.56, okay? Highest level in 14 years. And the reason for that is a nice, attractive alternative to gold, which is still hovering near the all-time highs, but slightly below it now. And as you can see, gold is beginning to run out of steam. This is why people are looking at its little brother, silver. Anyway, I want to move on to something else as well, about what else is important this week, which we need to pay attention to, which again, all this tariff stuff, all this tariff talk is taking the market away from hard facts, hard data. Okay, all this uncertainty really is adding up to something big which is happening today. I remember a couple of years ago when I was doing a show similar to this, it was all about this data, and that is obviously the US CPI, which is due tomorrow. Now, the question being asked in the market, will we finally see the tariff effect? Because so far, all economic data coming in, because it hasn't really taken hold, we haven't seen a dramatic tariff effect on economic data as of yet. But are we finally going to see an impact on inflation? Okay, and now here's the biggie, because the expectation is for the CPI to come in at 2.6%. Okay, previous reading was 2.4. So we are expecting to see a slight rise in inflation, according to what the consensus at the moment. But the question I then have for this is obviously going to spook the market even more, because we are seeing a rise in inflation. Then the probability again of the Fed cutting rates starts to die out, because there was a lot of excitement that the Fed may do 2 rate cuts this year, but because inflation is still above their 2% target, but the labor market shows signs of doing okay or being steady. But again, this would then, go underline the whole wait and see approach, which they've been doing. And don't forget, the Trump administration is putting a lot of pressure on the Fed, and in particular on Powell. So that's been interesting, worth keeping an eye on. Don't forget, that's tomorrow, Tuesday. And I might do a watch along. I don't know. I haven't decided yet. I might do. Anyway, as well as that, something else happening this week. Earnings season. We're in full swing. It's really kicking off now. Big companies, tech company coming out this week, and some other massive manufacturing companies. We have Netflix, PepsiCo, United Airlines. That'd be interesting. American Express. Now, the reason why I say United Airlines may be interesting is because Delta Airlines released their earnings last week, and it was a lot better than anticipated. In fact, let me show you how Delta Airlines reacted to the earning report coming out. It was a huge move forward, huge open up higher, because the earnings came out a lot better. So it'll be interesting to see what American Airlines has to say in their reports tomorrow, this week. So keep an eye out for that. As well as that, of course, we have got other economic data coming out this week, which is going to be important. We have UK claimant count, UK unemployment rate, US retail sales, and US consumer sentiment. So be aware of that. Don't forget, of course, you can ask me questions anytime you want. I'll say hello if you like. Or let me know your thoughts, your opinions. This is what the show's about. While we do these little live shows, is I want to hear what you think about the market, what your opinions are, what you're trading, what you're looking out for. I really like to hear that. So bear that in mind. As well as that, if you're watching me on YouTube and you like this sort of thing, subscribe if you like, by all means. Hit the notification button so you know next time we're going live, which is almost every single day, certainly when there's something to talk about. And if you like this type of content, by all means, give me one of these. It's nice to know that you like what we do. And oh, hello. I got a hello. Hello, Ahmed. Nice to meet you, sir. I hope you're well. Hope you're good. How are you doing today? Thank you for saying hello. How are you? I hope you're good. yeah, so like I say, if you like this sort of thing, by all means, give us one of these. It's nice to know that you like what we do. As well as that, if you're not part of the OneRoyal family and you're interested to know a little bit more, by all means, there's a little link in the description below. Click on it and you'll find out a bit more about us, and maybe you'd like to join us. Hello again. Hi, Betty. Really nice to see you. Thank you for saying hello. I really appreciate that. How are you today? Yeah, so by all means, do that. The other thing I've noticed as well, a lot of people tend to go back, miss the live shows. They tend to go back and watch the recordings, which is great. I like any type of way, any type of form for support for the show and for what we do and what we talk about. And if you are watching it recording, you're not watching it live, Ahmed Omar, nice to meet you, buddy. Like I say, and if what was I going to say, and if you are watching the recordings, and you have a question or you have a comment, by all means, put it in the little comment section below, and I will see it. I will reply to it next time I go live on air, which is practically almost every single day. So don't forget that. Hello, Mr. Omar. Very nice to see you. Am I saying it correctly? Is Ahmed Omar? Yes, is that correct, sir? Correct me if I'm wrong, because my pronunciation. But I think that's anyway. Nice to meet you, sir. I hope you're good. I hope you're very, very good. Anywho, don't forget. You ask me questions, Mr. Omar, for example. What do you trade out of interest? What are you trading at the moment? Or does anybody else have any questions? Or anybody else out there want to tell me what they're trading, what they're looking at? Maybe something we can talk about together. Let me know. No more questions? Okie dokie. Not a problem. Not a problem at all. But thank you for the interaction there, Mr. Omar. I really appreciate it. Thank you. And thank you everybody else who's come along to watch the show today. I really appreciate it. Don't forget, like I say, we do tend to go live almost every single day. Certainly when there's stuff to talk about. And keep an eye out for the watch-alongs we do, which of course we do, for the big events like non-farm payroll. Like I said, I may do a watch-along tomorrow on the consumer price index. I might do one on that. Because, like I said, I do think maybe, this might be start showing us signs of the tariff effect on the economy, on the market. And if that's the case, then I think it'd be worth talking about. But anyway, if there is no further questions, not a problem. Leaves me to say this. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.